All right, guys, let's take a look at the broader market and see what we have a good probability of happening this week. So, as far as last week, the COVID algorithm had been following almost to a T for 2 weeks. Now, Friday was supposed to be a down day where we closed at the low of the day, but we didn't. We actually closed near the high of the day. And I think that's definitely given with all the catalysts that were there Friday. And I don't think Wall Street got the if conditional for that second leg of a sell off. Now, with that being said, we do need a follow up day to kind of really say, hey, one day wasn't just an outlier. Now, with the VIX closing above 20 last Friday, I'd said there would be more pain this week, and it looks like we're getting it this morning. So let's just go through this stuff really quick. All right, so the VIX, 100 years of data, right? All of this says anytime we get a weekly close over 20, right here, weekly close over 20, there's usually there's more pain in the market, right? And if we look today, if we just look over here, SPY's down 1.3%, QQ is down 1.5%, IWM is 1.2%. And if we look, we're pretty much near the lows of last week, right? So the idea is I would prefer us not to cut this low, but around the 7-8%. So right now could be the bottom. We could be creating the bottom. There is, I think it's a 40-minute demand zone, 30-minute demand zone in this demand zone, which is what we're in right now. So it's possible we see that. It's possible we undercut it a little bit, but the VIX did say that there would be more pain coming this week, and we're getting it Monday morning, which I would prefer it like this. I would prefer a gap down. I prefer a rally after the gap down. As long as we close higher than we open, then we're good. Now, I can say, over in these areas for like these years, it's usually multi-days, multi-week, very bad. Right? But something I noticed is the weekly closes up here, are actually impressive. If we look at VIX and weekly closes here, which there's only two. So this was a weekly close and this was a weekly close. So 2 in 2 years. If we actually look what happened at the market on these weeks, and ironically enough, today's March 10th, this one was March 13th, which is Monday. So this like the same time frame. But if we actually look, this was on Monday, August 5th, and this following week was on Monday, March 13th. Let's actually do it like this. Okay. So we look at SPY and we look at August 5th. What happened on August 5th? On August 5th, we had a major gap down, and that was the final gap down for the next cycle, right? August 5th. You see that? Weekly close over 20, which was August 5th the following week, and then March 13th the following week. Remember that. So here's our August 5th, right? And now we look for March 13th. There you go. We had another gap down. You see how it's a gap down? Another gap down, next cycle. So that is favorable considering where all the charts are to begin with. So the last 2 times in 2 years that we got a weekly close over 20, that following week there was a final gap down on that Monday, and then it started the next cycle. That's favorable today. What we need to see is we need to see these reversal candles. We need to see a gap down and we need to close higher than we open, right? So that's something we have to look for. Now that we look at the VIX, let's look at where we're at with everything. So if we look, let's do QQQ. If we look at QQQ, you can see that since we started the cycle, we haven't broken below the white 50-week moving average. So this is the trend. Not only is that the trend, there's actually an ascending support trend. we actually hit it and bounced off of it. So we have 2 points of confluence for support here. So if we were to gap down Monday around this level again and then close green and then rally the rest of the week, supporting the VIX idea, supporting August 5th, supporting March 13th, then that's supportive too, right? Okay, here's another angle. One of my favorite indicators, the ADL line. If we look at the ADL line here for the QQQ, you can see an ascending support, right? You can see an ascending support right here. This ascending support is all the way back from August 2nd. So you can see it marked the bottom of August 5th. It marked this bottom on September 6th. It marked this bottom on November 10th. That's actually funny because now we're on the 10th, right? And now we hit this day. And as long as there's gap downs and we close higher, the ADL line, the accumulation line, will keep going higher because it's a bullish concept, right? A gap down is low volume. If we buy it up enough to close higher than we opened, then that is a buy side imbalance. So here's another angle. And then let's look at like major things like Tesla. Tesla is at its 325 purple line. You can see it's always been support. It's also in demand. It's also down 45%, right? We've also found support here, and we've consistently started accumulating higher highs while the price has made lower lows. That's a bullish divergence, right? What about the mega cap ETF chart specifically? We have an SR flip, we have accumulation, higher highs, while the price has made lower highs. But then what do we have? We have the ascending support getting defended, just like the QQQ, right? We have monthly demand supporting it. We have the purple line, which is its trend line between the gold and purple, right? Between the gold and purple, between the gold and purple, between the gold and purple. So this is supportive too. What else do we have? I think this is really valuable. Here we go. We hit this level recently in the mega cap chart, and it's only been hit 4 other times. One right here, one right here, one right here, and one right here, right? What happened the last time that we hit this level? The bottom of an entire cycle, right? We didn't even hit it in 2020, by the way. Where do we hit it here? We hit it at the bottom of this actual current bull market. And this is where I think we're at. When we hit on the bull market here, we made a lower low, a bullish divergence. You see that? RSI rising, price made lower low. And I think that's literally what's happening right here. And today it's very possible that that's the final one. You can see the divergence, lower highs. And even though we've been making lower highs on the indexes, charts have been becoming bullish. You know, like NEO's rallying, Mars rallying, China's rallying, like a bunch of like random names are rallying, even though the indexes aren't. And I think this is just like the finishing touches. So right now, Tesla's at 253 in pre-market. We didn't actually hit the purple line. If we look here on the weekly, we have this collage of moving averages, which are in the 240s. So we got 243 on the 100-week moving average, and then 247 on the 200-week moving average. And on the monthly, we actually tapped the white line, and then the 20-month moving average is 249. So I think it's possible we could undercut and hit that at 245 area. What about NVIDIA? Same thing with NVIDIA. You know, we're only a couple dollars away from the 105. So I think it's possible at the beginning this morning that we hit the purple line and then rally. Or we could stay above it, but it's very possible that it looks like a bottom's happening today, right? And then Bitcoin. Now, when I talk about Bitcoin, I have to like you guys have to really understand this concept. Crypto is not a revenue generating asset. And although it looks good this morning, but even though it sold off over the weekend, you know, it's like let's look at like Doge. Doge literally dropped like a rock, right? As soon as its cycle was done, it's down 66%. Um, but it's not a revenue generating asset, right? Bitcoin's down, 28%. So the idea here is it's like if the economy was to go to shit and money was to become scarce, when everything does become discounted and we're at the bottom of a bear market, money's going to first flow into the revenue generating assets first, which is the mega caps, right? The companies that generate revenue, the companies that are truly holding the economy up when the economy is doing good. So when uncertainty happens, you typically want to take hands off the non-revenue generating assets or rotate them into safer assets, especially like if the multiplier going up is similar. And if we're near a bottom, then you can just get leaps in almost any time you buy a leap. A 2 year out, year and a half out call option, you're going to make more money. But this is the most important thing, right? It's this simple. The Bitcoin chart is this simple. You can see since the beginning of Bitcoin's life in 2011, when it came out, the white 50-week moving average has been the bull trend. And anytime it gave up the bull trend, it was a bear market. So once it, right here, we rallied from 2011 to 2014. When it gave up the white line, it never reclaimed it for 2 years. You see that? So 2 year bear market. So then, from 2015 to 2017, we had a bull market. You see that? As soon as it gave up the white line, it was a bear market. Once it gave up the white line, it did not reclaim the same price for over a year. So 14 months, right? So then the 2018 to 2022, right here, you can see it again. Boom. Once it gave up the white line, we didn't reclaim the same price for 2 years. For 2 years. So it is simple. No motion. The white line is the line in the sand. We're in a bull market till we give it up. And if we do give it up, we're in a bear market. And if we're in a bear market, then price can possibly not come back for a long time, right? So this is where we're at. This is the line in the sand. This is what I mean. I keep saying, I'm like, I know it feels like we've lost a lot of money, but it's like you're right there. So, do you want to sell it and then this happens and we hit another leg up, or do you want to sell it and then it break below? This is also the concept of why you would want to rotate if you're going to stay in crypto into something like Bitcoin, because Bitcoin's at 83K. So for it to even go under 75K, we're looking at 10, 12%. If Bitcoin's going down 10 to 12%, what are the other underlying assets going to do? What's Doge going to do? What's ETH going to do? There's going to drop 20, 30, 40%. So it's like in the time of uncertainty, until we start getting uptrends in the smaller time frames, like the daily time frames, right? Like let's get above this pivot high or this pivot high. Get risk is so high there, but that's what I see with Bitcoin. Now, given I feel like it would be a lot worse if this wasn't at the same time as the rest of the market, right? So that's my thoughts. Now, also, I will cover NEO. I'm not going to cover all other small names because the markets, everything's going to follow the market. I hope that makes sense. If we go to a bear market, no stock's going to really work. But I will cover NEO really quick. I want you guys to understand that currently we've been trading, everyone's scared half to death, right? But we've been trading sideways since April 2024. We've been trading sideways for 8 months. That's not distribution, that's accumulation. They've been building a position down here, right? And now we're at the point where we have this 2 year green line of a downtrend, right? And we have an ascending support. This has created a wedge. You see that wedge? We're there. We have 2 weeks left and it has to pick a direction. At the end of a wedge, there's always a directional move. So we're sitting here. We're at the end of this wedge. We literally have maybe 2 weekly candles left, but the earnings should be coming, I think, this week, even though it's still uncertain. But we have 2 weekly candles left. That's it, before it picks a direction. I've been of the bias for a while that this looks like this. This looks like the exact same algorithm, right? So this is where we're at right here. This is where we're at, right? We broke above the white line in the gold band. And now we're literally right here in this area. And what happened next? Bull market. And I think that's really what's going to happen. I really do. Um, if we get our bull market, if conditional of the market, so we have to be worried about the market. But you know, like Neo's 10% away from an invalidation. That's as good of a risk as possible, right? It's like I'm not going to sell this, and everyone's freaking out about their options, but they went sideways, they went up, and no, we didn't get to trim. Like I was going to trim and rotate the Aprils if we would have just gotten 550, but we got 511, and then we got which what fucked us is we got a decently bullish candle. This isn't a complete reversal candle, but we closed above the 200 and the 100 when it was above it. So I was like, oh, okay, well, there's a chance. But no, then there's a major gap down, and we didn't even fill that candle. So that was bullshit. But it is what it is. But we did get a bullish weekly close, right? Like these are all bullish candles. Um, these are two bullish weekly candles, and uh, this is something I want to look at as well. Is we have this descending resistance on the ADL line, and this is a back in 2020 support. And what we have here is a breakout. Now, given we need to break out this one too, because this was a fake breakout from the 515, but this is peeking its head out again. So I think we see a rally this week. And if the earnings is good this week, then we're good. And then this is what's important too, is this Wednesday. This Wednesday is the economic data. Here we go. And the entire scare of all of this has been bad inflation, right? The entire scare has been bad inflation. Um, Now, given CPI and PCI was bad last month, but then PCE is the one that matters the most, and it showed that CPI and PCI wasn't that bad. So when the PCE data came out, which is the lowest since Trump's first term, that's bullish. Now this month, Wednesday, they're forecasting lower than previous, right? So 0.3 to 0.4, 3.1 to 3.3. If these come in as expected, this is a break of the uptrend. You see the uptrend in the bar graph? You see the uptrend in the bar graph? If these come in line, that is bullish. It's very bullish. And if that does, that literally cancels out everything. So the market should go extremely risk on. Now, if this comes in as expected, wouldn't that support the thesis of all the charts I've been showing you? Creating the bottom, how about we bottom today, right? The VIX pop over 26 on a Monday and then we reverse. It's there. The thesis is there. The stage is set. If we can get it, I think it happens. Now, this is something I want you guys to pay attention to. I think we're looking at the exact same algo, right? If you look at this, you can see the same move in Alibaba right here. You can see a break above 325, a break back below the 325, same thing. A break back above the 325, a base at the 325, a little bit of undercut, and then we start the parabolic rally. Then everyone got bullish. And then for 2 months straight, just a knife drop. Just sold into everyone. Nobody's getting out, right? Panic sell, because these are retail favorites, right? Right? Like how many people kept buying this? They're retail favorites. So as soon as they start rallying, everyone buys 5-month out contracts, 4-month out contracts. So what do they need to do? They need to burn them, right? So is it possible we do a counter trend rally like this and we base back down at 250 and then we do it just like Baba? Yeah, it's possible. But regardless, I think there's a bottom here. There's a bottom here, and it would fit the narrative for us to hit this supply right here. I think I even have it marked. Yeah, for us to hit this marker right here, which was I posted about the 5-year chart and the 59 monthly candles of us hitting 320. It would make sense for us to hit 320. And if it hit 320, I mean that's a 28% move, I think, right? Yeah, 28% move from here. And in options, that's a 100% move, right? So I think there's a story here, especially fitting the whole narrative of everything around, that we see a rally on Tesla to 320 at least. And then what we're going to probably see is a higher low, right? And then we're going to rally to 500 into the end of the year. I think that's very probable. So take all this into consideration. We have a lot of uncertainty ahead of us, but I think there's a lot of clues at this very moment. So let's see. Cheers.